Hello there. I'd just like to say a big thanks for popping in your details. And now it's time to go through the 6 steps to successful investing. Step 1. Price. Accept the market price. Now markets are efficient. The latest news is price in and price in milliseconds. So don't try to time your entry or exit to the market. If you've got money to put to work, then just get it invested. And if you need to pull it out to buy a house or a car, then just pull it out. Don't try to time your entry or exit, because technically you're getting your emotions involved, and quite often you'll be on the wrong side of the coin by doing so. You should almost do it the same as if you're going to the local supermarket to buy a litre of milk or a loaf of bread. You just accept the price for what it is. Now, we're not talking about individual stocks here, because they've got a different pricing metric or valuation that you'd apply independently. It's called price to earnings ratio. We're talking about a global diversified investment portfolio with these 6 steps. Step 2. Gurus. Now beware market gurus. I'd actually suggest that you ignore them, for the simple reason their track record is very poor. So let's look no further than the latest Brexit vote, so Britain leaving the European Union, or Donald Trump winning the US election. Both were tipped by market gurus to not happen, and the inverse or the opposite took place. And I was actually watching CNBC at the time, and when Donald Trump got voted into power, they actually forecast the market to go down about, or the Dow Jones to go down about 1,000 or 1,200 points. But what's happened? The markets have rallied, and now we're calling it a Trump bump. Go figure. And did you know that up to 90% of investment managers are underperforming the benchmark that you are paying them to beat? And 60% of hedge funds are closed within 3 years of operations or opening up their doors. Best to stay clear and best to ignore them, in my opinion. All researchers tell us to ignore them. Step 3. Costs. Quite passionate about this one. Control your costs, for the simple reason it helps narrow the gap between your returns and the market returns. So when we're talking about costs, we're talking about investment fees. MERs, you know these as management expense ratios, or ICRs, indirect cost ratios. Platform fees, brokerage transaction costs, administration fees and advisor fees. So when it comes to investing, we can't control the returns that we receive, but you can control the costs that it takes or you pay to receive those returns. And this is why here at Blue Diamond Financial, our average investment portfolio for our global diversified investments on average is 30 basis points, or less than 1/3 of 1%. So how much are you currently paying? And did you know that a 1% difference in fees could actually amount to about $1 million over your investment lifetime? And it's actually proven to be the largest contributing factor to your overall returns over time. So we're very passionate about it, and I suggest you should be as well. Step 4. Discipline. Be disciplined, because human nature is to buy when markets are high, and we often like to sell when markets are low. Now we obviously need to be doing the opposite of this, but again, your emotions get involved, so it's quite hard for some people to do this. We just need to accept that volatility, which is prices moving downward, is just part of the investment journey. As soon as you come to grips to this, then your path ahead is just a lot easier. Now, if anything, if the markets are off 25%, we should almost look at that as being a gift, or Christmas has come a little bit early. We should be, if anything, putting more money to work, but we don't do that. Same as if you're walking down the street, Just Jeans have got a sale, 25 or 50% off on a pair of jeans. The same jeans that they had in that shop yesterday, they're just cheaper today, same as good companies. Should be treated in very much the same way, but we don't. Step 5, risks. Now spread your risk, and you're surprised how many professionals I've worked with, whether it's over in the UK or here in Australia, they don't actually do this themselves, and they kind of get their fingers caught in the cookie jar, you might say, whether it's the .com or the GFC or whatever the next major boom or bust might be. It will obviously play out again and again. So you need to spread your risk the same as we actually eat, or you need to eat, from the different food groups. So think of your fruits, veggies, meats, grains, then your investments should be treated in very much the same manner. It's called diversification. Stocks, bonds, cash, sectors and countries all help to reduce market volatility, and as for the most part, they perform differently depending on where we are in the economic cycle of boom or bust. So here at Blue Diamond Financial, we expect the markets to pay us a bit of a premium, or a payoff you could say, in a particular area of the market. So we actually tilt our investment portfolios to that area of greater expected market return, using the latest market research to kind of dictate how we do that. Now if that payoff or that premium wasn't received in any particular year, then our default return would be like a market-like return. Now step 6, balance. Stay balanced, which is your percentage weighting to each particular asset class. We suggest you rebalance your portfolio at least once a year and restore it to its original target asset class weighting. Effectively what you're doing in the real world here is you're trimming down your profits and you're putting some of from your winners, and you're putting some more money to work in your underachievers or underperformers, you can call them, you lose them. Automatically rebalance effect, and actually has a good compounding effect over time is quite important. Now the compounding effect of following these 6 steps: accept the price, beware market gurus, control your costs, be disciplined, spread your risks, and stay balanced, you should start to see a greater overall return on your investments, which in turn should be moving you closer to reaching your goals and objectives. Now we are based in Sydney, but most of our clients don't actually come from Sydney, as a large percentage of our meetings are conducted online, just to reducing the hassle in getting things done. Now I want you to listen very carefully. If you're 40 years of age or older, have an income of $100,000 per annum or greater, and are interested in sports, in particular the horse racing industry, then I want you to call 1-800-77-32-02 immediately and take advantage of our current special promotional offer. And with that offer you receive an obligation-free discovery meeting, done at our cost. It could be done online, utilising one of our meeting rooms, or over the phone, your choice. And you'll also receive 50% off your very own strategic financial plan, up to the value of $1,200. Now this offer is subject to the discretion of Blue Diamond Financial, as a limited number are available. So please call today to secure your financial tomorrow. Now thanks for listening, and until we meet again, may you live happier through financial healing. Bye for now.